Hey, this is Mac with PriceActionTradingSystem.com. This is Wednesday, November the 14th. This will be our price action chart lesson for today. Before we get started, just a couple little quick housekeeping notes, just to catch people up to speed. We've really had a lot of new people kind of join in that are watching the videos or either coming to the website and reading some of our articles and things like that. So I'm getting a lot, probably twice as many emails as I was getting 60 days ago. So what that means is, you heard me say it yesterday, is that I'm not discouraging anybody from sending me emails. I want everybody to continue to send me emails because that's how you learn. But just the reason I bring this up is it's taking me longer to get to them. And, so just don't over inundate me with multiple emails and multiple questions each day. But if you've got a question, send it to me. I'll answer it. And, I'm not discouraging people from sending me emails. I guess that's the point I'm trying to make. I just want you to understand it may take me a little longer to answer your emails than maybe it did in the past. Because I'm getting so many of them. And normally I always try to answer all emails within 24 hours. And at this point I still should be able to do that. But a lot of times when I'm done for the day, I'm just done and I'm tired and burn out. And so it may be the next day before I answer your email if it comes in late or if I've got a whole list of them. So again, the reason I bring this up is I don't want to discourage anybody from sending me emails because I know that's how you learn and that's how you get better at this, especially because we don't have a trading room type deal where you can ask questions as we go. So feel free to ask me the questions. The only reason I'm bringing it up is because it's taking me a little longer to get back to you. So hopefully that makes sense. But and then the second thing, I continually get asked about trading rooms or doing a trading room, and just for those people that are new, I'll explain to you why I'm not interested in a trading room and why I really don't want to do one. And the reason I got into trading is because I wanted to get away from corporate America. I spent a lot of years working in corporate America, always traveling, always gone. I missed half my life of my kids growing up. I was away from home a lot of nights, and I'm home every night. I see my kids play. I see my son play ball every week. I see my daughter cheer, go to dance, and I don't miss those things anymore. And I like the freedom that this lifestyle gives me. So and it's not that I'm really against the trading room, but the additional stress, the additional work, and all of that comes along with it, because you can never make everybody happy in this world. I just don't want to deal with that. And hopefully that makes sense to people. And I just prefer to stay away from the trading room for the reasons I just mentioned. And maybe I'll do one day. But I'll be honest with you, the money is in the trading. The money's not in teaching and trading rooms. And you make money doing that, but the money's not there. The money's in trading. I can make more money trading in a day than I can probably make in a week doing a trading room or that kind of thing. And it's too stressful. It goes against my promises I've made to myself and my family that if I could make it in this business, the things I would never do again. And right now, a trading room is one of them. So again, nothing against the trading room. I just would rather trade and do the teaching on the side. And I do enjoy the teaching part. So maybe one day I'll consider a trading room. But my personal opinion is a trading room just allows you to piggyback my trades. And yeah, maybe you make some money by doing that, but you're never going to learn to trade on your own unless you do it on your own. And I'm a firm believer in that. So for that reason, I want you to learn to trade and you to learn to pick out your own trades, because, it's the old saying, teach a man to fish and he's set for life. And so what I want to do is teach you guys to fish. I want to teach you to trade, so you can trade on your own and not have to rely on somebody else to catch the fish for you or to do the trading for you. So anyway, enough about that. Let's get on to the chart lesson. Really good trend. The market just continues to sell off strongly and on high volume, and today was one of those days. And honestly, I was done trading right after this trade. This was the last trade I took right here, and I doubled my target for the day by this point. By the time I exited this trade, so it just doesn't get much better than that. And you know, yeah, I could have kept trading and probably quadrupled my daily take, but you know, many of you that have been around, you know my take on getting greedy and giving your money back by making mistakes, because this thing could have reversed anywhere in here, but these were all good setups, and we'll talk about them. But I had enough money today. I was happy with my take by the time this trade right here was over. And so, you know, there were 4 easy trades right here that I took and doubled my daily take. And I have a pretty good daily take. I'm actually taking, I've actually increased my daily take recently. I won't talk about my, um, you know, how large my account is or how big many contracts I trade, but I have said, you know, I'll trade anywhere between 2 and 5 contracts fairly regularly, and occasionally I'll double that up to 10. And every once in a blue moon, I might trade a few more than that, but you know, you don't want to over leverage your account. And I never keep more money in my account than what I need to trade my average number of contracts. Once I get over that amount, that's my payday. I take that amount out. I sweep it out. If it's, you know, at the end of the month, if I've got more than what my margin requires, that's my payday. And if I have less, then I don't get paid. And I like to get paid every month. So, but I don't like keeping a lot of money in my trading account past that, because, you know, people that tell you need 20 and 30 and $40,000 to trade futures, if you've got that much money in your account, you're living on the edge. That's all I'll say, because if you've got that much in your account, you can lose that much money. And if something happens in this crazy economy, um, you know, there's been some brokers. I like my broker. I feel safe with my broker, but anything can and will happen today in this world, and I don't trust having that kind of money in a brokerage account. I only want enough in there to do what I need to do every day with my margin, and then have a little bit. So just to give you an example, let's say you want to trade 2 contracts every day. You shouldn't need more than $1,000 margin for that. So you shouldn't need more than $3,000 or $4,000 in there, because if you do, if you need more than that, that means you're losing. And if you're losing money every day, then you need to be on the sim trader and shouldn't be trading live anyway. So do with that what you wish, but I promise you that's good advice. Um, I just can't seem to get off my soapbox today. So anyway, let's get on to the trades. Let's talk about the trades today. You can see the downtrend. We were kind of in a little range here, but we were trading down. But what I did was, notice this. I drew this line off these first couple of swings here. I just copied that. I drug it up. And so I was looking for prices to turn here. But even if you didn't have that up there, notice these highs across here, and that's what we had, and we got a double top there, a little failed break higher, and it was real close to my trend line. I think originally I had my trend line just a tad steeper than that, and so I think my trend line probably looked about like that right there, but that's still, everything closed below it, so I felt real good about it. And so when this turned down, I actually went short right here, but it was better probably to wait on this bar. And I'll show you something else too. If you did wait on this bar, your runner was easily safe here, but if you got in up here, they came back and got your runner. So I lost my runner because I didn't give it any extra room on this one, because I wasn't sure yet that we may not go higher. But notice this, we got 2 legs back. It's a second entry short. We're kind of in a downtrend. It's a double top, almost a triple top. A lot of reasons to like this short. I just didn't get a runner this time. And I actually could have entered again here, but I didn't. It's so close to this low, and this was looking like a range. And you can see we did bounce here. We went a little lower and then bounced, but then we worked on lower. But the next really good setup, and look at this. This is 2 legs back to a suspected trend line. Now this confirms your trend line, and so I actually went short. I tried to get short on a limit here, didn't get filled, so I had to get short on a stop right here, and I went short right here. and you can see that prices pulled back this time, but they didn't get my runner. They missed it by a tick, and so I was able to ride this all the way down. And actually, I had more than one runner on here. I was able to ride this all the way down on multiple runners. This was a huge payday, and I exited as soon as we hit this trend line right here. I exited on. Actually, I just dropped my a limit, or I had my limit order sitting, and I had it all down through here, and I just kept moving it to where it was one tick above, where when it hit the trend channel line, I would exit. So I exited right there at 1363.50, and I'd entered at 73. So that's almost 10 points on that one move on a couple of runners, several runners there, and that filled up my coffers for the day. And then you got another chance to enter here. No big runners, but an easy scalp on another set of contracts. And then this one was interesting right here. I actually got filled on a limit order right here. Put a limit order above these highs. As you can see, it went a little bit higher, but because I used a limit order, I had to figure out where I was going to put my stop, and I had no real safe high to put my stop above, so I just kept my 2-point stop, and you can see that I entered at 67.75. So there was where my stop was, right there at 69.75. I just used my 2-point stop, and you can see we never really got close to that. You could have entered below this bar or this bar, really. This one was a little suspect when it ended, because by that time you got 4 overlapping bars, and even though that's a reversal type bar, you got these other 2 over here, so you got a bunch of overlapping bars. It's better to wait and see if you can't get a better entry than that. And then look, we ticked 1 tick higher, failed, turned down, so you can go short right there. You were able to ride these runners all the way back down, and you probably wanted to exit once you got into all this chop, or maybe even on that bounce right there off the trend line if you had your trend line in place, which you should have. And you should have been looking for a short here anyway, because we got to retest this low, and this is not a very good retest. So I really thought we might get another leg up from here that was equal to this one, but that didn't happen, and the market's just too weak. You got another chance to go short right here on this big revert. This thing ticked higher, turned down, closed on this low. Nice trap. Again, only good for a scalp. And every time you got one of these big reversal bars right here, you had to be thinking, I got to enter. There's plenty of room back down to the lows on each one of them, because this is looking like a range now. And now that you've got this correction in here, you might be thinking, hey, we might have another leg like this. And you should be thinking that, because we traded down into this trading range. And so you had to enter here, you had to enter here, and all these are just reversals. Each time we made a new high, prices reversed, and those big reversal bars, they were selling it hard, and every one of them were good for a scalp. And then finally you got a double top up here. You can see that double top. And that bar, you got 2 big stems, and this one closed almost on its low, so it's a good place to go short right there. But the only thing is you didn't get any runners on that, but when it turned back down, you could have gone short again. There's still plenty of room to get out. And this time any runners were safe, and you could have ridden this thing all the way to the close today, all the way down here or all the way to the close, and made another 10 points or so. And it's almost kind of like here, you had one trade, you didn't really get what you wanted out of it, so you got another chance, and you didn't really get what you wanted out of that one, but you got another chance here. And again, your runners were safe, and then you had this breakout pullback second entry short. There's your new low. You pull back first entry short, you move up second entry short. So that's a second entry short. It's a 2-legged pullback to the EMA. It's a breakout pullback short. And you may not have liked going short below that bar, but when you saw that one right there, you had to get short there. Now, one thing I will say, if you got short here, you didn't get a runner. But if you got short up here, your runners were safe on this, and you could ride this all the way down. And there was no reason why you couldn't get short right there. because that's a break. You know, there's multiple reasons to enter that trade, and you actually probably would have had that line like that by that time because we bounced there and you got your high there, and it's just a failed break out of this all this chop too. So there's multiple reasons to go short there, and there's more trades in here. It's late in the day. I didn't mark any, but there's more shorts down in here, and but if you didn't make any money by this time, then you're really struggling to see to understand price action and what we're trying to do. So, you should be, your goal, I say this a lot, and I know a lot of people may disagree, but I think your goal should be to be done by noon each day. And you can see I was done by a little after 11 o'clock. My last trade I entered was actually it was actually before that. So try to be done by noon, because I always tell people, if you make a mistake in here, you got plenty of time to make it back. But if you make a mistake late in the afternoon down in here, you don't have time to recover from that. And it gets real nerve-wracking when you're running out of time. It makes you make more mistakes. So try to have your trading done by noon, 1 o'clock, and definitely don't enter after 2:30. If you're still managing a trade after 2:30, that's fine, because a lot of times I may be in one of these trades that last all day, and I'll manage it right up to the close and stay with it. If it's still moving in my direction, nothing wrong with that. Just try not to enter any new trades after 2 o'clock or 2:30, and really, I'll be honest with you, I would try to be done with any new trades by noon every day. And if you can do that, I think you'll find that you're better off. And but anyway, I'm going to wrap it up. Hope you had a good trading day. I got a couple of emails, so I know some of you did. This is a fairly easy kind of day. It might have got a little dicey for you in here, but again, you had all this setup. And again, there's trades down through here, but where am I always telling you the best trades are? The key entry points, which are strong support and resistance, which are these areas in a range, and trend lines are nothing more than slanted strong support and resistance. And you can see that. There's your resistance, there's your support. So you could have even bought all this, although I tell you not to do this on a range day, a strong trend day, because you'll get fooled. It looked like it was going to bounce all down through here, and depending on how you had your trend line, you might have saw it bouncing off of it down through. But I believe this was your trend line right here, and then we finally got the bounce right there. So just remember that even though there's entries down through here, these are the ones that are real risky. The ones that are high probability are the ones at the key entry points. And again, I'll say this one more time, and I try to say this a lot. The key entry points are your strong support and resistance areas. Now, when you got trend lines, these are strong. That's strong resistance. That's strong support. And if you got a trend line going the other way up, when it comes back, pulls back to hit the uptrend line, that's your strong support. And when it touches the high part, that's your strong resistance. If we're in a trading range, assuming this is the day, here's your strong support. And you could see you could have bought this down here several times and made money, but it's risky because the overall trend's down, and you don't want to, the trend always takes precedence. So your better ones are up here, and you can see every one of these highs with the reversal bar would have worked. And it just doesn't get any easier than that. So remember that. Stay away from the trades. Don't be continually looking for a trade. When prices were coming down through here after I exited right here, I wanted to get back in so bad, but I waited and waited. And, what I did when I exited this trade down here, and I told myself, okay, I'm not looking to enter again until prices come back to this line. And I just sat here patiently. And you see, I had to wait a while. I had to wait from, 10 o'clock to almost 11 o'clock. I'd sit here an hour on my hands waiting on this setup, and then it finally came. And this was the first time we got to the trend line. And yeah, it did go through it, but you still got to remember the trend is still down even after a trend line break until you get a retest. Now, this might have been good enough to be a retest. But when you get these big reversal bars and these setups, you got to take these thinking that, hey, we may get another leg down. And sure enough, we came within 2 ticks of getting another leg down. So, but anyway, I'm going to wrap it up. This is Mac with PriceActionTradingSystem.com. We'll see you next time.